Hey, good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Friday. TGIF to you all, and November 18th. And wow, imagine next week is Thanksgiving. Time flies. Not much news scheduled for today, so we'll just jump right to it. We just had the leading indicators, and we had 0.2%. We figured it would jump up a little bit to about zero point 0.7, and actually exceeded expectations at 0.9%. So that's pretty good. Things that basically coming aboard where the economy may not be slowing down as much as maybe I anticipate. So that could be a good sign for us. So let's jump over to the headline news, and we will see stock market's a little mixed today. And a lot of it has to do with ECB's, as we mentioned, no matter what the domestic news we've been receiving, Europe has been kind of superseding that. And the European Central Bank purchase of Spanish and Italian bonds, about 225 million or million the other day, uh, really helped along things, along with their talks about possibly lowering rates. So investors are a little bit more concerned, but again, I'm saying for now, there's still a big mess to cover, and see what happens here. So we'll hope for the best, obviously, and because if they hiccup, everybody else is going to feel it as well. So along that line, let's see where the interest rates are moving along with the bond line. Excuse me about that. And we have here, as we saw, we had some pretty big fluctuations here. We even jumped up above here, touched this ceiling here, and bounced back just and settled just below the 10-day moving average. What this basically means, we see these swings back and forth, low and highs, as we're seeing here, these star effects here. Basically, it tells you the market's confused, doesn't know which way to go. It's looking for some big news to break out, to go one way or the other direction. And that's kind of where we're at. That's why we're kind of in this long sideways motion here. As I mentioned, we had a bond rollover here, this day here, and actually we would be right up along this line as well if it wasn't for the bond rollover. So, all right, folks. So interest rates are probably about the same as yesterday, because depending on when the rate sheets came out and everything, but pretty close about the same. Maybe slightly worse, but not by much or anything pricing wise. And but otherwise, yeah, I expect another pretty much sideways motion today. And again, unless something big breaks out. So you guys have a wonderful weekend. Catch you on Monday. And again, if you're on my site, Mike'sDailyMarketReport.com, subscribe. If you're on the YouTube channel, subscribe. Thank you guys, and have a great day.